Hey everyone, welcome back to Corporate Decoder, the place where we take those huge corporate filings and, unlike your accountant, make them a little bit exciting. This time we are diving into AGILYSYS' 10K filing. Get ready for some talk about profits, strategies, and of course risks. It's like a financial roller coaster, only with less screaming and possibly more boredom, but hopefully not. Before we start, if you appreciate getting straight insights from corporate documents, make sure you're subscribed. We also have a Discord community linked in the description below, a great place to chat more about finances and business. AGILYSYS, a leader in hospitality software, just dropped its annual report. In short, they had a pretty good year, boosted by subscription revenue, but are facing some global risks. Let's decode what's really going on. First things first, this report covers AGILYSYS' financial year, which ended on March 31, 25. This document is basically their yearly checkup, giving investors a peek under the hood, revealing not just the good, but also the potential bad and ugly stuff they may be facing. AGILYSYS, for those who aren't familiar, has been around since 1963, but today they are focused on software and services for the hospitality industry. Everything from hotels and casinos to restaurants and even healthcare facilities. They provide the point-of-sale systems, property management software, and all the behind-the-scenes tech that keeps these places running, and are in a competitive market that includes giants like Oracle. AGILYSYS wants to help its customers improve employee and guest experiences. By doing this, they improve customer loyalty and are increasing revenue. Their key human capital management objectives are to attract, retain, and develop talent to deliver on our business strategy, with employees sharing a passion for technology. And our employees are also expected to create a working environment where everyone is respected, regardless of individual differences. Now let's get to the good stuff, the financial highlights to here. The report divides revenue into three categories: product subscription and maintenance and professional services. I'll tell you right away what matters. Subscription and maintenance is their bread and butter. They show the following revenues. Products brought in $41.3 million of funds subscription and maintenance $170 million, and professional services $64.2 million. Good subscription and maintenance revenue increased $32 million, or 23.2%, which they say was driven by a strategic focus on developing and promoting end-to-end solutions, while market demand for innovative new products addressing specific hospitality needs continues to reinforce this trend. In Warren Buffett terms, this is great because if you have someone paying you consistently, that's reliable business with a good foundation. Professional services revenue increased by 27.7% because they are leading experts. It increased from $50.30 off. Meanwhile, their product revenues have dropped, so they are relying more on the services and subscriptions rather than one-time sales. AGILYSYS estimates their total addressable market is approximately $16 billion in annual recurring revenue. While the size of the opportunity might face pressure in an economic downturn, they feel it remains in the billions of dollars while their business represents only a fraction of that size. Of course, it's not all sunshine and roses. One section outlines the risk factors they are seeing, and like all companies, they are worried about the global economy and also political instability. And they say that their business may be impacted by decreases in travel and leisure activities resulting from weak economic conditions. AGILYSYS says they face extensive competition in the markets in which they operate, and their failure to compete effectively could result in price reductions and decreased demand for their products and services. And we're talking about big names like Oracle and smaller players like Shiji, Amadeus IT Group, and Infor. It's a crowded field. The implementation of software solutions often involves a significant commitment of resources, and any failure to deliver as promised on a significant implementation could adversely affect our business. Some of their customers may incur large, unplanned costs in connection with the purchase and installation of our solutions, so they could always decide not to buy it. Cybersecurity is a top concern as well. Cyber attacks involving their systems and data could expose them to liability or harm their reputation and have a material adverse effect on their business. They experienced unauthorized file downloads, impacting customers who use their InfoGenesis POS, eTech, and AGILYSYS Analyze products, but says it did not have a material adverse effect on their business, financial condition, or results of operation. Let's take a look at the operations performance as a whole. Here are the most important numbers from operations. Total net revenue increased $38.2 million, or 16.1%, a sign that the business is growing. The total cost of goods sold increased 11.2%. Less than the increase in revenues, that's a good sign, and gross profit margin increased from 62.4%. So they are keeping more money, which means the underlying business is improving overall. They do invest in their business as product development increased $5.7 million or 10%, as well as sales and marketing increasing by 16%, so they are spending money to bring more customers and create better product. Opet said their operating income percentage, aka the profit, only grew from 6.6% to 8.2%, indicating that there's a bit more room to improve the operating efficiency in the future. Their interest income decreased 25.6% due to some complex financial operations such as repayment, the income tax provision, benefit change from 65.5 to 65.5 to $2.4 million, which looks like bad news, but it isn't, as it's a change, as it was only one-time releases of credits in the past, which means they now have to pay more. AGILYSYS says that their stock has been volatile and expect it to continue to be that way. Factors affecting the trading price of their common stock include uncertainties in the global economy and any major change in their board or management. Lastly, they have a lot of intangible assets which require them to do accounting acrobatics. As of March 31, 2025, they had $130 million of intangible assets, which they review them for impairment, a fancy word for losing all value at least once per year. Here's what I found particularly interesting about this report. Their CEO and information security teams provide regular reports to senior management and other relevant teams on various cybersecurity threats, assessments and findings, and that the board's cybersecurity risk subcommittee receives regular SOC and PCI assessment reports. They are very serious about this matter. Now, what's my take on AGILYSYS? The company is definitely moving in a positive direction, increasing revenue and making sure to invest in building their own products. That said, they do face a lot of big threats like the economy and cybersecurity, so they must be careful. And overall, I think AGILYSYS seems to be taking the right steps to continue to succeed in a challenging market. Alright, that's our breakdown of AGILYSYS' latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.